Hi, and welcome to another HC Media Group training course, where today we're going to be looking at profit and loss. And I'm going to teach you how to read a profit and loss correctly and to understand what the information contained in it is telling you and to understand some of the terminology on a profit and loss that you see every day. Before I do, I'm just going to tell you a little bit about myself. My name is Joe Hamilton. I'm an award-winning author in business. Yes, I've got a book out there on the wonderful Amazon. The book is on digital marketing and how to be a success at digital marketing. And what's the book called? I hear you say. It's called Cake. Yes, that's right. It's called Cake. The reason I called it Cake is because for me, that just conjures up all the ingredients that you'll need to be a successful marketeer. And that's why I called it Cake, just to create a bit of a fun title. Really is a good read, but again, of course, I would say that, being as that I am a little bit biased. But if you are looking to explore a little bit more about digital marketing, how it works, etc., then do yourself a favour, pop onto Amazon and take a look at Cake. I'm the managing director of HC Media Group. We're the fastest growing marketing agency in Essex. We set up 2 years ago. We're based in Colchester, and approximately 10 months ago or so now, we moved into an office in Colchester, just not far from the castle. And since doing that, our business has just rocketed and has taken off really, really successfully. And so much so, I'm very proud of what we have achieved. And as I say, we're the fastest growing marketing agency in Essex. Before starting up HC Media Group, my previous life, I've managed over 200 retail stores, looking after their business management, so everything to do with business. Additionally, their finances, so making sure that the profit and loss was in the right place, making sure that net profit was looked after, and ensuring that each of the stores and indeed each of the areas that I worked on were as efficient as they possibly could. My specialism, therefore, is in growing businesses through business management and finances, and as I say, making sure that we drive forward that net profit line. And I've worked for some household names who I'm sure you will be familiar with. I started off, many years ago with the wonderful Whitbread. You may remember Whitbread Inns. So I started off with them, as I say, many years ago, and I moved across to a company called Thresher. So again, you may remember Thresher were the biggest off-license chain in the UK. And I started off, I started off the branch manager with Thresher in one of their stores in Romford with 10 staff. And we soon made it a flagship store. It was it was one of the most profitable stores that Thresher had on their books at that time. And it was a huge success. Because of that, I got promoted to being area manager. Again, I wanted to share some of my experiences across the rest of the estate and to improve the offering that they had. Again, was very successful. And before I left Thresher, I was a regional manager. Again, really, really good business to work for. But thought at that time, crikey, where else could I go? What else could I do? Or what other business could I help with the knowledge that I currently had at being a success in business? So I moved across to the Co-op. You may be familiar with Co-op. Again, another really, really good company to work for. I was an area manager with those also. And just recently, I was with Well, been with Well for 11 years. So Well, you may know, is a very famous pharmacy chain with stores up and down the country. As I say, I was with them for 11 years as an area manager. 25 stores, sort of Essex and North London, and all of the trials and tribulations of managing stores in and around that area. Probably with staff about 260 people, I guess, at any one time. So really, really good business to be in, and I was really quite successful there. And thought, you know what, maybe I could do some of this for myself, which is why 2 years ago I set up HC Media Group. But in addition in addition to those household names, I've also helped loads and loads of different and smaller businesses. So some of them with, I don't know, maybe 3, maybe 4 employees, and I worked with them on a consultancy basis. And again, they've asked me in to take a look at the culture within their business, take a look at their profit and loss, how could they be more efficient, how can they be more effective, and all of it designed to make sure that we drove forward the bottom line net profit. So again, as I say, worked with hundreds even of smaller businesses, but something that I really, really enjoy. And again, the reason why we're doing this training is that I just want to be able to share that information with you guys out there also. If you'd like to get in touch directly with me, just for a chat, just for a one-to-one, then by all means, please do. Please email me at team@hcmediagroup.co.uk. That's team@hcmediagroup.co.uk. It would be an absolute pleasure to talk to you. So, on with the training. So the training is on profit and loss. And first of all, I guess we need to understand what is a profit and loss. What is a profit and loss statement? So put simply, a profit and loss statement, which could also be known as an income statement, is a financial report that displays your total income, your total costs and total expenses, and net income for a given time period. That's effectively all as it is. So it's income, your outgoings, and what's your bottom line profit. And again, you can generate a profit and loss statement for any time of the year, but the most common time frames are monthly, quarterly, and annually to be able to produce a profit and loss statement. So I'd like to just show you an example of a profit and loss and be able to enable you to be able to understand what it is, but also to talk to you about some of the important lines on a profit and loss. Excuse me. So in this example, we've called the company ABC1 Limited, and this is their profit and loss to April 2020. So in the first section, we have what's called turnover. So turnover is the amount of cash that has come into the business. So there'll be several different lines on here, but again, on this example, we have other revenues that's come into the business is £566, and the total sales again for this business is 135,000. Remember here, of course, that all your figures are excluding VAT. So that's really quite important. All the figures are excluding VAT. So some of the terminology now. The first line of your P&L will be the total turnover, so the total amount of money that's come into the business. And that's more commonly known as gross income. So the gross income for these will be all of the sales that's come into the business. And in this example, it's 136,000. The next section is from that 136,000, there'll be some expenses. There'll be cost of sales. And generally speaking, these will be fixed costs. So the likes of commission or introducers fees, cost of goods sold, direct expenses, direct wages, any directors' dividends, etc., etc. So all of those are added up, and you get to, as you would imagine, total cost of sales. So the total cost of sales, which generally are fixed costs, for this example is 54,000. The next line is your gross profit. Sometimes you'll find on some profit and losses it's called gross margin. So how do we get to gross profit or gross margin? Effectively, it is your gross income minus your cost of sales equals £82,000, which is your gross margin. This is the maximum amount of money that you have made by selling that product and taking away all of your costs. From that £82,000, we then have to work out how much your admin costs are. So admin costs, generally speaking, are your variable costs. And again, I'm generalizing here, but there will be your variable costs. So it'll be the likes of advertising, marketing, accountancy fees, so general expenses. So I don't know, tea and coffee and so forth for the office. Any insurances you have, rent, rates, etc., etc. All of that all goes into your variable costs. And in this example, we have your total administrative costs is just a little over 79,000 quid. You then have to work out what your operating profit is. So the operating profit is your gross margin minus your administrative costs. So the operating profit on here is now just short of £2,500. So of a turnover of £136,000 for this business, so far our operating profit is 2,500, which is not bad. Don't forget, everything is almost paid on there. But that is not our bottom line profit. That's not our net profit, because operating profit doesn't take into account what's called EBITDA. Now, EBITDA generally is used for larger companies rather than small SMEs. So EBITDA stands for earnings before interest, tax, depreciation, or amortization. And again, I'll talk to you a little bit about that in more detail. Generally speaking, at this stage for small business, so similar to ourselves, I guess, we would just be looking at taking off any taxation at that point. And in this example, we haven't taken off any taxation whatsoever, but if there was any taxation to have on the operating profit, it would go in that line. And then your bottom line profit. So you've often heard people say, what's your bottom line? Your bottom line is your net profit, and that's operating profit minus all of your taxation. And that's it. It's as simple as that. I guess the most confusing element of a profit and loss is the fact that some of those highlighted areas are called different things. Like, for instance, the very top one, turnover, sometimes it's called gross income. Gross profit is sometimes called gross margin, etc., etc. Net profit is sometimes called bottom line. So once you get your head around some of the terminology, it's really quite straightforward to be able to understand and be able to read profit and loss. So the next slide that I have is how to calculate net profit or your bottom line profit. And again, we have gone through this step by step. But effectively, what you're looking at here to get to your bottom line profit is you take your cost of sales or deduct your cost of sales from your total income. Again, that's in the first section of the profit and loss. And that will give you your gross margin or your gross profit. You then have to take off your overheads. So remember those overheads that we had with the variable costs? So take that away from your gross profit or gross margin, and you get, as I say, your operating profit. And this is also known as EBITDA. So earnings before interest, tax, depreciation, and amortization. Generally speaking, EBITDA, as I say, is used for larger companies. And sometimes you'll find on a profit and loss, particularly for SMEs, so small, medium enterprises, it'll be known as EBIT, E-B-I-T, because you won't have the D and the A, which is depreciation or amortization. Depreciation is depreciation of a tangible asset. So, for instance, in a large organization, you'll have a huge investment in computers, vehicles, office furniture, etc., etc. And those assets will be depreciated over a period of 3 or 5 years. So by that I mean, if for instance you've bought your computer for £600 and you're depreciating it over a period of 3 years, that means that that computer is then only worth £400 in the second year, it's only worth £200 in the third year, and it's down to zero. So that's what depreciation is. Amortization is similar, is very, very similar, albeit it's a depreciation of intangible assets. So this generally happens around sort of franchise agreements. So you buy a franchise within the UK, it might cost you 100,000. The following year, it's only worth 95,000, etc., etc. So that's what amortization. Don't get too hung up about amortization and depreciation. It is really accountancy terms, but I just thought that I'd make you aware of it. We don't generally get involved in that much of it, but it is something to be aware of. So that's a little bit about EBITDA. And then obviously to get to your bottom line profit, so you take your operating profit and you take off any tax, etc., etc., and that gives you your bottom line profit for that particular business. So I just want to talk to you just a little bit now about some of the terms, so the profit and loss terms explained. So what is gross income? Gross income, don't forget, sometimes called total revenue. This is the total amount of income into the business. So the total amount of sales into the business, it's your top line, is called gross income. What's net income? So net income is your gross, so the top line, minus the cost of the goods sold. Any expenses and taxes. So that comes in as your net income. What is gross profit? So again, this is your total revenue. So don't forget your gross income sales minus the cost of the goods sold is gross profit. Again, what's operating profit? So operating profit is right down at the very bottom. You may remember from the previous two slides. This is the profit you have after operating expenses. So like rent, salaries, rates, etc., etc. They're deducted from your gross profit, but it doesn't include interest or tax deductions at this stage. And your net profit, so your net profit is the bottom line. This is the actual profit within that business. And it's the amount you're left with after everything else, including your taxes, has been taken from it. And it's as simple as that. I just think people get confused with profit and loss, and it's only because of the terms and the terminology, because there's so many different names for each of those lines on the profit and loss. So again, just to draw your attention to the actual profit and loss example itself, the way it's laid out there has got to be the easiest way for you to understand it. I do hope that that's been helpful for you today. If you want more detail on the subject, then by all means, please do give me a call. I'd only be too happy to talk to you. Just email me at team@hcmediagroup.co.uk. That's team@hcmediagroup.co.uk. And as I say, I would be more than happy to talk to you. I hope you've enjoyed this part of the course. I've been Joe Hamilton. Thank you for listening.